Welcome to Crash Concepts, where the economy, energy, and the environment are explored. Up next, fresh ideas and insights into the factors that are driving the world and shaping your future. Presenting information you can't afford to live without, here's Chris Martenson.
Welcome to this Peak Prosperity Podcast. I am your host, Chris Martenson. I have to confess, like many novices and professionals alike, I am finding it difficult to make any logical sense of today's financial markets when looking at Spanish 10-year debt trading at record low yields, or German 10-year debt looking like it might test 1%. 1%. Bonds are making a strong case for deflation. And so is gold, which continues to head downwards despite any and all geopolitical events. Yet when we wander over to the land of equities, we see nothing but blue skies, complete faith apparently in reflation and inflation, and a future of even more spectacular corporate health, as evidenced by the fact that the best performing equities of the past year by far were those with the trashiest balance sheets. So who's right? Neither? Both? Is it possible there's no good signal left to analyze after more than 5 years of extreme financial repression? Well, to help us make sense of all this today is someone I recently met at the Wine Country Conference and whose views I immediately respected for a number of reasons. First, I found his views to be pragmatic, very reasonable, and clearly formed with the wide view that comes from experience and a travel schedule that involves 30 or more countries a year. With us today is Steen Jakobsen, Chief Investment Officer of Saxo Bank. He has more than 25 years of experience within fields of proprietary trading and alternative investment. His career has taken him from Citibank in Copenhagen to Hafnia Merchant Bank to Chase Manhattan in London and then to Swiss Bank, also in London. After a few more transitions, he joined Saxo Bank in 2000, and after a brief departure to Lemus Capital Partners, where he was Chief Investment Officer for 2 years, he returned to the bank in 2011 as Chief Investment Officer. Steen, it's a real pleasure to have you with us today.
And that is the way, Chris, we get through this crisis. It is to be more innovative. I mean, one of your expertises, of course, is energy. And that's another thing we haven't even discussed yet. But, I mean, energy is becoming so expensive again at the same time as inflation is dropping and in the rest of the economy. How can we have higher energy prices and falling inflation? Because essentially some part of the economy is inflationary due to QE, and some part of the economy is deflationary due to the fact that labor has no wage power and that the economy has excess capacity. So we have a society and an economy where you can whatever you believe in, you can find it in pockets of the economy.
Well, let's switch gears to that for a bit. I'm really interested to continue this idea around resources and how access to resources is shaping the current landscape, maybe how you expect them to shape the future. So one of the ways that they're shaping our current situation, which is what you mentioned, where we have low wage growth. In some cases, it's actually negative wage growth. And we have rising costs for people. I do take exception with the idea that inflation is very low because that's maybe true across everything in terms of how it's measured. But when you look at things, particularly here in the U.S., when it comes to tuition, healthcare, and food and energy, those things are absolutely not in anything remotely close to a disinflationary environment. All of those are heading up reasonably smartly at this point in time. So when we look at this view of resources, how do you, if at all, do you see resource issues playing out in political and economic markets today?
I think politics dictates every single macro impulse. So in other words, I think the policy mistakes conducted by politicians and policymakers is what makes markets, that's what changes market, that is what changes directions. I've thought that all through my life, and I've been more and more convinced every single day. So a great example of a misplayed energy policy is Germany. So after the Fukushima incident, they decided to move away from nuclear power. Mm-hmm. So what the decision Germany then took at a 10,000 feet level is that they said, hang on a minute, because of the risk to nuclear power as a production, in terms of the risk to, this melting or whatever could happen, we will instead take a higher dependency on natural gas from Russia. I think someone in Germany right now is regretting that on a political scale. But more importantly, energy in Germany today, due to this energy shift, is the most expensive in the world, except for my country, Denmark. So the fact that Germany wants to be most green actually has a side effect, which is that they have the most expensive electricity. BMW just recently moved a engine factory from Germany, southern Germany, to Seattle. They saved 1/6 the price of electricity. They physically, practically saved 6 times the price of electricity by moving to Washington State. So energy is, and people don't recognize this. You do, Chris. I know this is one of your main fortes. But energy costs is a huge chunk of the input cost of anything that goes on. Every single app you drive on, you load into your phone or whatever, has a high energy intensity. Recharging your iPhone costs more than having a heater standing by every full year. I mean, people don't realize that what they see as progress in terms of apps and online and everything actually has a server somewhere that use massive amount of quantities of energy. So the energy consumption of the world is going up in a finite world, because people can believe or not in Huber's Peak, but as far as I know, the world is finite. There's only a finite place in terms of geographic area and resources. It's not like it's being renewed by someone coming from Mars and putting more energy into it. So I agree with you. I know your point is that if you can understand energy, you can understand what goes on in the world. And for me, there is politically one thing that's more important than fossil energy, and that is the fact, and this is a key fact to me, that in 10 years time from now, less than 50% of the world's population have access to clean water. I mean, clean water, energy, in my opinion, is going to be the tulips, is going to be the thing everybody wants in the future, and I don't think anyone is prepared for it. Countries like China, Singapore are deficient on water. Countries like Germany, all of Europe except for Denmark and Norway are deficient on energy. So structurally, we put ourselves up being very, very unable to deal with what comes in the future in terms of our deficiencies. If anything, we are pushing further away from that equilibrium level, the development, the investment into these things that should happen, because we pursue idiotic, in my opinion, things like windmills and stuff that, windmills have been around for 400 years. There must be a reason why they haven't become the number one energy source in the world, right?
Well, absolutely. I've been following very carefully what's been happening in Ukraine, particularly because of the large geopolitical wedge that seems to have been driven between Russia and the West, and seeing China right there with open arms. To me, the landmark deal was that gas deal where essentially 20% of all Russian exports of gas are now going to redirect to China starting in 2018. And it's not clear to me that Russia has the capability to dial up its current production by 20%. It's a magnificent amount. And so is there any concern at all anywhere on the European continent, particularly in the monetary side? People are looking at this saying, is there any concern over supplies, not just cost, but supplies of the needed gas to run the economy?
One of the biggest infrastructure projects in the EU right now is a rechanneling of the natural gas pipelines in Europe due to the fact that we became over-dependent on Russia. So, we have a lot of natural gas in the North Sea as well from Statoil in Norway. So they're rerouted and spend a huge amount, I think, if I'm not wrong, like $500 billion or something in total is the infrastructure projects on this, which is behind the scene and not really done so. But the short answer is no, Chris. I don't think anyone knows where to turn, because as much as you and I and everybody else want alternative energy to become more of a force, we still have this storage issue in terms of energy, which I think we will deal with over the next 10 years, certainly as we need to do it. But the Russian deal is very, very significant. The way Iran today, also sort of bypass the international markets for its products. I mean, a lot of the producers in the world today is actually bypassing the international markets, which means that more and more money and more energy resources is given up and not coming to the world market. And I think, first of all, that is a concern for the market itself, but it is also a concern for you and me in terms of what will happen to energy prices. And, I have friends that argue that the European monetary crisis, the debt crisis, actually started from the fact that we had deficiency in energy. So the energy cost actually killed Italy, Spain, Greece, and all these countries, which at the start of this crisis took most of their natural gas from Libya. So I think it would be a huge input to a potential downside and that could actually be what gets us into a Japanization in Europe. Of course, in the US, you're less dependent on foreign imports these days. But on the other hand, you have, as far as I remember, a huge environmental issue in terms of doing open sea drilling and the likes, and tar sand. Everything being equal is probably not the most efficient way to go about getting your energy out. So this morning I read shale gas companies have the biggest debt per balance sheet of any companies in the Russell 3000. So there's a number of issues, and I think the exploration cost of keeping this flow going is becoming immensely expensive. I think you showed it. You can follow up here, Chris, but I think you showed me a chart that between BP, Texaco, or whatever, all these guys, the exploration cost of actually maintaining their resources is up. Is it 4 or 5 times?
Yeah, 5 times since 2000.
Yeah, I mean, think about it. It's 5 times more expensive. At the same time, BP is being sued left, right, and center in the U.S., right?
Yeah, and their production is actually about flat from where it was in 2000. Hit a peak in 2005-06, and the truth is that when we look at all the North American shale operators as a bucket, they're spending $1.50 in capex to get $1 in revenue, and that's been true for 5 years. And these wells deplete in only 3 years. So the truth is that in my world, if you take a set of companies and they're all spitting out negative free cash flow when they should be in the peak of the stride of their current model, they've tapped the sweet spots, they're in the best plays, they've been drilling for long enough, and they're still spending more than they're earning, somebody really on the investment side needs to think about that carefully. Of course, we don't have a lot of careful investing happening right now. So, so as we wrap this up,